Everyone wants to make money, that's why you want to invest in stocks. But as you know, whenever you make money, you gotta pay taxes. But in this video, I'm gonna tell you a completely legal way to not pay taxes on your profits from stocks. All the info I'm gonna talk about today is available for you to see on the gov.uk website, and just remember, I ain't a financial advisor, all of them things there. Wagwarn people, welcome back. For those of you who don't already know, my name is Benje, I'm a business owner and a third year university student. Here, I am to help you make more bread by sharing my own struggles, experiences and advice. I'm gonna start off this video by telling you all the different types of taxes that you need to know and understand before you start investing. And towards the end of the video, I'm gonna tell you the tax-free method to invest your money and legally avoid paying taxes. The first tax you need to know about is stamp duty. Now you've probably heard of this one when it comes to buying a yard and having to pay stamp duty on the property. This specific tax is called stamp duty land tax, but when investing into stocks and shares you have to pay something called stamp duty reserve tax. This tax is automatically charged at 0.5% of the transaction value. So if the transaction is worth a bag, you'll be paying £5 in tax. However, you can avoid paying the stamp duty reserve tax right off the bat because it's only payable when you invest into UK companies. In other words, if you invest into companies registered overseas like Tesla or Apple, you don't have to pay the 0.5% charge. But do keep in mind that tax rates do still apply in the country that a company is registered in. Another way to avoid this tax is to invest into index funds and ETFs, because the way these work is different to investing into individual stocks. If you'd like to learn more about index funds and ETFs, be sure to check out this video. But if you did just want to build a portfolio of UK registered companies, then you just have to think of this tax as a cost of investing, because there's no other way to avoid it. The second type of tax you 100% want to know about is capital gains tax. This tax is defined as the tax on the profit when you sell or dispose of something, e.g. an asset that's increased in value. Capital gains tax works in a similar way to income tax in that there is a threshold where you do not have to pay taxes. This is called the capital gains tax-free allowance. This amount equates to £12,300 per year as of recording this video. In simple terms, what this means is that if you made under £12,300 in a year in actual realised gains, then you wouldn't have to pay taxes on it. You would, however, have to pay tax on any amount over the £12,300. So for example, if you made 30 bags in actual realised gains within a year, you'd have to pay tax on £17,700 of it. The tax rates differ depending on your tax bracket. If you're a basic rate payer, you'll be charged 10% of your profits. If you're a higher or additional rate payer, you'll pay 20%. The final tax I'm going to talk about today that you need to know and understand is dividend tax. I've already talked about what dividends are and how to get started with them in another video, but in basic terms all it is a distribution of a company's profits to its shareholders. Just like with capital gains tax, there is a tax-free allowance with dividends. This currently sits at 2k, but this was just over double a few years ago, sitting at 5k, so this number will most likely change in the future. For the majority of people like me and you in our current stages of life, this allowance is not something that we'll have to worry about for the next few years minimum. Companies like AT&T pay a dividend yield of over 6%, but even if you just invest in a company with a yield of 3%, you would need to have around 65 bags invested to be making 2k per year in dividends. For when we all get there, and we will get there because, you know, we like to speak things into existence and that, the current dividend tax rates are 7.5% for basic tax rate payers, 32.5% for higher rate, and 38.1% for additional rate payers. But now the thing everyone wants: how to avoid paying as much tax as legally possible on your investments. This is through a stocks and shares ISA. I personally have mine with Trading 212. One of these allows you to not pay tax on the income or capital gains from investments in an ISA. This means you do not have to pay tax on the dividends or your capital gains. For those of you just like me who want to pay as little tax as possible, this is the best legal way to do it over here in the UK. If you take a long-term approach, just let your money accrue and let compound interest work for you, then you'll be saving yourself a whole heap in tax payments on the hundreds of thousands, if not millions you have made. Unlike investing into a normal investment account where you'll face heavy taxes on your capital gains and dividends. There are some downsides with these, which include only being able to invest in one stocks and shares ISA per tax year. But in my opinion, this is even a downside because who needs to invest in more than one? As well as this, you can only invest up to the maximum ISA allowance of 20 bags per tax year. This one you have to be a bit more careful about because it includes any cash ISAs or LISAs that you may have. If you've seen my LISA video, then you'll know that you can invest a maximum of 4 bags per tax year into these. So if you were to max it out, that would mean you'd only have 16 bags of your 20k allowance to invest into your stocks and shares ISA. If you'd like to learn the different types of stocks you can invest into with the stocks and shares ISA, be sure to check out this video. Love for everyone who's watched this far, and we will see you again soon.